So good morning and welcome back to this course on entrepreneurship and business model canvas. So we are going to talk about unit 4, which is the business license and requirements. And today's topic is all about choosing the form of business organization is the topic we're going to see. So the first type is sole proprietorship, and the sole proprietorship is very simple. It is easy to manage and set up, and which requires a minimum of paperwork, and ownership and control are solely vested in the particular individual. So because it's only a single person, and the flexibility offers greater flexibility in decision making because he is the only person, so decision making he need not consult much. He can actually take a decisions. And operational choices, the owner is free to make choices without seeking approval from partners or board members. So it gives a lot of flexibility. Sole proprietorship gives a lot of flexibility. Whereas a partnership, you have a lot of shared resources and increased capacity. Now, shared resources is you have combined expertise of the partners, and also the resources and also the workload can be shared. And partners can leverage each other's strengths to achieve the shared goals. And increased capacity. The expands the business capacity to undertake larger projects, and you can actually expand the business capacity because of the partnership. You have multiple people, right? You can actually expand the business's capacity to undertake larger projects and reach wider markets. So the combined effort of partners allows for a greater efficiency and productivity. So we only are talking about the advantages as of now. So definitely each one of them have their own disadvantages as well. And the third category of the type of organization will be limited liability company, which is called LLC. Now, liability protection separates the personal assets from the business liabilities. So this is very important. Suppose there is the company organization did not do well. Suppose there is an LLC and it did not do well and it was suffering from losses. And when the promoters decide to wind down the company and if they have taken money from the creditors, now the personal assets of the promoters will be safeguarded against the business liabilities. So the safeguarding the owner's personal wealth. So this is one unique advantage of LLC. And flexibility provides flexibility in tax structure, allows for pass-through taxation or corporate tax treatment. This is a very important concept of pass-through taxation. So you will not be taxed twice. So only you will be taxed only once. So for example, as an owner, business owner, as an individual, you will be only taxed once. The ease of management offers operational ease and the very simplified manufacturing structures and less regulatory burden. The regulatory burden here is compared to corporations are lesser. So that is one more advantage with respect to a limited liability company. And corporation is the next stage, and it is a proper legal entity, established a separate legal entity, and there is a distinction between the owners and offering significant liability protection. Fundraising potential is much higher with respect to corporation, where they can issue stocks in the stock market and where you can attract investors and you can get the capital, which is very important for the growth. And the tax advantages are also there for corporation, though they benefit from a lower tax on corporate income compared to pass-through entities. And our dividends are taxed twice. The dividend is actually the interest which is paid by the organization on the equity share. So that is the interest income which is paid by the organization on the stock market share. So how the dividends are taxed twice. Now next is the S corporation. S corporation is one more type of legal entity. It's pass-through taxation. Profits and losses are passed through directly to the owner's personal income, avoiding double taxation. And limited liability offers, the liability is also limited, offers liability protection similar to corporations, shielding personal assets from business debts. And ownership restrictions are strict ownership requirements, limiting the number of shareholders and the types of investors. So this is the S corporation. Non-profit organization is one more type. It is actually mission-driven, focus on specific social or charitable mission serving the public good. Tax exempt status, exempt from paying federal income tax, making an attractive option for charitable causes. Fundraising and grants relies heavily on fundraising and grants to support its operations and fulfill its mission because it is a non-profit entity. Next is a cooperative type, which is a member owned and controlled by his members who share in profits and decision making. Democratic structure operates on democratic principle with the members electing the board of directors and having a voice in the governance. The community figure often focus on serving the needs of its members in the local community. So this is one more type. And the factors to consider is liability, level of personal liability exposure for business debts and obligations, and what is the taxation, tax implications for owners, including the income tax and business tax burden. This is one more factor you should be considering before you going for the which type of organization which you should choose. Third is the funding needs. Whether the business is going to require funds, what is the frequency of funds, and what is the level of raising funds. So that is also a very important factor in designing the type of structure. And management structure, the degree of control wanted, the decision-making authority and operation flexibility will also determine the type of business structure. So there are each an advantages of each and every structure. So thank you very much for the session and patient listening. And thank you very much.